Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 28th of October, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the first week of November. And as we were highlighting last week, there's potential of a breakout higher above 2000, and it did manage to do that right in the afternoon of the Friday US session, and did break through the 2000. And at the same time, the dollar yen did already break above 150 round figure on Wednesday, and push up higher to set another high on the Thursday before retracing and pulling back down on Friday. It's not so clear here, but we'll see that in the analysis. So let's take a look at the key drivers for last week, and this coming week is a critical one with three major central banks announcing their decisions, with the Bank of Japan first, and then the Federal Reserve, then later on with the Bank of England as well. So critical week with all the major central banks reporting and announcing their rate decisions and policy decisions. Okay, so let's review that. So for this week, the key news will be from these three central banks: the Bank of Japan, Federal Reserve, of course, and the Bank of England, and then leading into the Friday's non-farm payroll report. But looking at last week, the ECB was the first one that announced, and they were expected to hold their interest rate, which they did. But then they could be looking at a pause and potential cuts earlier on, as they did indicate that inflation did slow down in September. So let's see whether that's going to be a critical impact to the euro if it does continue to hold in the next round, as this would indicate that it's possibility that there could be rate hikes in the early part of next year. The flash PMIs overall Eurozone was slightly lower than expected, while the UK and US did better than expected. And in Australia, the CPI figure was also higher than expected. So let's see how that impacts their next, the RBA's decision next round. And a surprise GDP rise for the US is also could be a short-term impact for the last quarter. So this coming quarter could be lower than expected then, and so it could be just a short-term impact here. While the core PCE price index remained high and came in as expected. So it's this could be an impact or influence to the FOMC's decision this coming Wednesday, where they are not expected to increase or change rates. So they have left it unchanged for the last two rounds. So we'll see whether they're still going to maintain that. Bank of England as well is expected not to raise rates, as they could be following the path of the ECB, and if inflation does come down faster than expected, then they could also begin to cut rates earlier than expected. So this could be a potential dovish move or dovish pause. And then on Friday, the non-farm payroll report, lower forecast than expected, which was a surprise for the previous month. So this week is a very critical one with all these three major central banks. And Bank of Japan, like, since it has been, the Japanese yen has been weakening quite a bit, there could be some major policy shifts, so to try to strengthen the Japanese yen back up. So we'll see. It's going to be a very interesting week this week, and there'll be a lot of volatility, so do watch out for that. Right, let's go back to the analysis. Start off with spot gold with a Friday afternoon drive to break above the 2000. And if we drop down lower, you'll see that there's a 4-hour time frame, and we go down to the 1 hour. See that drive through on that's at 1 p.m. US session, and 1 to 2. So that's closed by 3 p.m. on a Friday afternoon US session, just to break above the and close higher as a flight to safety and safe haven with all the geopolitical issues going on, and just to close higher before the weekend. So we take a look on a weekly time frame. That was started off with a gap down at the start of the week. See, did we see that on the daily? And yes, there was this move here on the Monday. It's gap down here, and then followed by Tuesday, attempt to almost retest the 1950, and then gradually climbed up through the end of the week. We go back to the weekly time frame and push up above the 2000, and still with a bullish bias, attempting to push up to the 162 with extension at 2032. It's whether it is going to break through higher to hit the 2050. That's the next round figure where a couple of these spikes were. So don't rule that out. Let's see whether it's going to break above the 162. And just to tap the 2050. Let's see. Not sure whether it's going to dip lower into 1975, because there's already a previous week's high here that could be an interim support, and across all these recent highs as well. Okay. Let's move back to the daily time frame, and for now we may leave this fib reversal swing as it is. Next key resistance will be at the 162 fib. Support is now at 1950. There is some interim support as at 1975 as well. But we'll leave this as it is because the 138 fib extension aligns almost exactly with the 2000. It was at 1999.75. So we'll leave that as it is, and let's see whether it's going to target the 162 fib extension. All right. Let's compare this with the US dollar index DXY, which may not correlate here as well as the euro because of this safe haven move. Okay. And here's the DXY. It did dip below as inversely correlated with the euro, where the EU bounced higher first on broke out higher above the triangle on the Monday and then pulled back into the triangle on Tuesday. So similarly, the inverse relationship with the DXY did correlate here. So it dipped below the triangle and hit the support at 105, bounced back up to climb above the triangle upper trend line, and then pull back to retest it on at 106, consolidating as a doji on Friday. So let's see what this one holds for us for this week now. With could be a larger triangle, or as with the euro, could also be the opposite of the bullish channel. Is a bearish channel here, but also possibly a bull flag here, right? With this possible breakout higher, but we'll see what happens this Wednesday with the FOMC report, FOMC decision, and then on Friday the follow-up after that, and whether it supports that move with the non-farm payroll report. And on the weekly time frame, spinning top with long lower wick and a strong bounce back up from the 105 and climbing back above the 106. So let's see what happens this week, and it's potentially could break through and attempt to test the 107. Did hit earlier in the month, and see whether it's going to reach the 200 fib extension 107.25. and we could adjust the fib, but let's see. Move this to a smaller swing move. Where the 21 fib retracement aligns with the 106. 50 fib extension corresponds with a major support here. Put the major resistance at the 107, where the recent swing high is. So let's see whether it consolidates within the channel or whether it's going to break out one way or the other. There is a major support here at the 50 fib, daily 55 EMA, and recent 105 test. There's more potential support here. Whereas on the resistance side, let's take a look on the weekly time frame again. If it does break out higher, there's a key resistance here at the 107.61. It's not too far above the swing high, 107. So we'll see what happens if it does break the 107. All right, so critical one for this week for the US dollar and its impact to the other major pairs. Right, let's move back to the other pairs. Okay, so moving on to the dollar against Japanese yen. And it finally broke out after an attempt to dip lower and bounce back to form a hammer on the Tuesday. Push up higher to eventually hit a high, set a high of 150.78 before pullback on the Friday. So this has now formed an ascending wedge, and looks like it has also closed below the ascending wedge, which is bearish in the short term, and it's anyway due for retracement. And looking forward to Tuesday's Bank of Japan's rate decision, which well, actually not so much a rate decision as a policy decision, where they could adjust their yield curves and attempt to support the Japanese yen, which has been already weak for so many months. So they could add pressure on the dollar yen and push it back down. Let's see whether it's going to drive it lower to the 149 and then the 148. That's where the 138 fib extension was or is. just at the 148. And take a look on the weekly time frame. Close as almost a doji, but with a spike through the recent high, so that's short-term bearish sign. So we'll mark the key support at the 138 fib, 148 round figure. Key resistance at this recent high. And perhaps an interim support at the 149. Okay, so very early in the week, some high volatility moves with the Bank of Japan's policy decision. And then it's also exposed to the Federal Reserve's rate decision, which they are expected to just hold. So there will be exposure to US dollar price action. Let's see whether it gets down all the way to 148 with the rising daily 55 EMA as well. All right. So let's see if this is a critical break of the support. Okay, so do check out my other videos on the other major pairs with this very key week coming up, and have a safe trade, have a safe trading week and a good trading week, and cheers for now.